Thanks.
All
You
right, let
too.
me kick this off by saying this is an unusual schedule for Blake to take on early and ahead of dawn, but good morning and welcome to the second hour of TheoTrade. I am Professor Jeff Bierman. I'm broadcasting live from Chicago, and today obviously is Wednesday, December 31st, 2025. It's obviously New Year's Eve, and I wanted to kick this off with a positive note into next year, even though the market's down today and the technical setup is bearish. I decided to split today into a 20-40, which means I'm going to spend 20 minutes doing the theme, move on because there's not much to say today and virtually anything. It's a slow day, and then get to the lesson at hand. It is a one-off, it is a trend day, it is a surprise, so I'm going to hold off. So hello to the usual suspects out there. A lot of new faces. I reckon Michael Gio, John O'Donnell, Kevin Press, Bart F. I see everybody out there. Tim Trains, Peter Schrader. Welcome to you all. I'm thrilled to have 800 people here today. I thought there would be half as many because you'd be out saying the market's, it's a flat day, I'm up. No, traders, we never take a day off. That's what I love about you. That's what we all probably birds of feather get along, especially when we get to the trader retreats. You realize we have a lot more in common than we have differentials when we actually meet, even though we live in different parts of the country. So without further ado, today's theme is the master of the obvious. It's Old Lang Syne. So just for kicks, I thought I would end the year on Theo by bringing up Old Lang Syne. Okay, these are the actual lyrics. It's typed out from traditionalmusic.com. I don't want to go through all of it. It's not necessary. Everybody knows the song. Should old acquaintance be forgot and never brought to mind, question mark? Should old acquaintance be forgot and Old Lang Syne? So here's the history behind it. And I know about it because I spent almost a year in Scotland. A lot of you don't know this. I was an English literature major in college. I was also a sociology major, double major at Berkeley. And when I was studying abroad, I studied at the University of Stirling in Scotland, and I studied a lot of Robert Burns. So that's a little hint here. So for those of you who are in the know or not in the know, this is good on a New Year's Eve. Old Lang Syne, or Old Lang Syne, is a Scottish song traditionally sung to bid farewell to the old year at New Year's Eve celebrations, symbolizing nostalgia and the importance of old friendships. The origins come from here. It was written by Robert Burns, who's the best poet out of Scotland and the best poet out of Ireland. Yesterday I profiled was, wrote Dubliners was James Joyce. So the lyrics of Old Lang Syne were penned by Robert Burns from Scotland in 1788. So we're almost 250 years into this. Although the song is based on older Scottish folk traditions. Burns claimed to have collected the words from an old man during his travels, marking the first time it was formally recorded. Translation, for those of you who don't know, the title Old Lang Syne translates roughly to old song since, unquote, or most importantly, and this is where I'm going with this for the theme, quote, for the sake of old times, reflecting themes of nostalgia and remembrance of past friendships. So the cultural significance is obvious. The song is most famously sung at the stroke of midnight on New Year's Eve. So you might sing it with those who are, if you're awake, with those you love, those you care about, particularly in Scotland, where it is part of the Hogmanay celebrations. Participants often join hands in a circle while singing, symbolizing unity and shared memories. Here's what I want you to understand about its wider usage. Beyond New Year's Eve, Old Lang Syne is also sung at funerals, graduations, and other farewell occasions, emphasizing its role in commemorating relationship and shared experiences. So one for the road, people, one for the road. This is Old Lang Syne. Take a look at the market today. Take a look at how much money you've made this year. Take a look at the absurdity in AI, the absurdity in precious metals, okay, and the absurdity in the market. Take a look at it and remember it. Take a snapshot of it because it's not likely to duplicate itself next year. I don't know if we're going to end up or down, but if we end down, take comfort that this was a good year and that you've preserved what you've made this year. And if we go even higher, okay, don't get over your skis and go chasing things and double down, because eventually the market always, okay, neutralizes and humbles everyone. So happy New Year's to everybody out there. Now, macro catalysts. There's nothing that strikes me, okay, in a macro catalyst that makes a big difference at this moment. I'm trying to understand, like, if there's any canaries in a coal mine out there that will help get me ahead of next year. One of them I call deep divisions. Yesterday at 1 p.m. Central Standard Time, 2 p.m. Eastern, the FOMC minutes were released, and it showed officials were in a tight split over the December rate cut. The fact of the matter is, you might see this as not a big deal. I keep telling you, if there's one thing the market hates, it hates a lot of things, but the market can't deal with uncertainty. It doesn't like it. So when people say, markets climb a wall of worry, it's a lie. It's a stupid, stupid line. Stupid! Markets go up because they're confident. Markets go up because they know. Okay? Markets go up because they feel good. If they're scared and they're uncertain, they don't go up. They go down and they sell because they can't read the tea leaves. The idea here is we are getting more uncertainty about the change in the Fed regime. You're going to have a whole new set of governors in the rotations. If ever there's something that could break the market psychology, that's it. That's my belief. Number two, bear down. I don't have anything other to add how this impacts the stock market because it just doesn't. But what I find interesting yesterday comes down to this, and it's a factoid. I can't make this up. It's true as it were. Okay. Yesterday, it was reported that a large whale trader opened a 9-figure trade on short positions across Bitcoin, Ether, and Solana. The fact of the matter is, a single high worth net trader got short $119 million on Bitcoin futures, 106 million short on Ether futures, and got 43 million short on Solana futures. Now that's not my style. You got to have cojones of an iron constant. You got to have seriously a stomach made of a rock to make a call like that. But what I like about this call is, okay, is the fact is, okay, the market's not moving now. It's like Don says, the market knows. Even after they made that call was reported yesterday, because it was reported early, Bitcoin didn't even drop all that much. It hasn't moved at all that much. So this person who made this big move, sometimes when people advertise, it actually works against them. And sometimes when they advertise, they're doing it because they have a larger agenda at play that links or corresponds to other markets. If in fact this plays out and drives lower, will this drag down the stock market? I don't know. But if we break below 85 to 83,000 on Bitcoin and the market goes with it, and I throw up a correlation, you better be worried, because somebody is sending messages out there that liquidity is coming at a price. And as Garrett says, if the liquidity is sopped up or the spigots are shut off, this market's going down. There's no way the market's going up if you turn off liquidity. You have no shot, people. Markets go down when you turn off liquidity, and when you keep the faucet on, markets can walk higher for a very long time. The last thing I want to throw out is what I call house arrest. Okay, house arrest. The good news is, and there's good news, home prices are slightly more affordable. It is reported across a number of regions in the United States that home prices are starting to ebb. Now, they're not coming down 20 and 30 and 40%, but they're starting to come down in increments of 1 and 2% a cross-section of regions. That is good news. That will take the edge off of interest rates, right? The problem is the down payments are ridiculously prohibitive. The average individual, okay, needs prices to come down. And although they've come down in many metro regions, 5%, okay, housing sales can't go up because the down payments to buy the house and then the monthly down are still too expensive, even with the 6.5% mortgage. So the good news is it looks like inflation in housing is top, but that's just housing. The bad news is it's still not in that range where people are opening up their pocketbooks and saying, okay, this is a sweet spot where I'm going to get in hell or high water. So we probably have much more to go when it comes to housing prices, another 10%. And if that drives down interest rates, that will actually help the economy. Okay, just individual stocks, nothing big. The first story is run for cover. So the idea here is Michael Burry, this movie about the Big Short, stuck his neck out and said, I'm going to short Tesla. I'm going to stick my neck out and short Tesla. I'm not sure at what price he took that short, but I know he took Tesla short, which he reported sometime in early November. He took that short. It was reported this morning, it is official, Burry has closed out his entire Tesla short position. Entirely. Now, whether or not he covered there or higher and took a loss, nobody knows. But when I hear a short trader covers his position, that does not make me want to be bullish. I don't. When I hear short traders loading a short position, that makes me get even more bullish. And you're like, why? Because when a short trader closes out a position entirely, it removes a layer of liquidity underneath the market. As long as there's shorts out there, markets can move higher. To me, that's actually counterproductive. The second news on Tesla, which I call it affectionately, and it's like, haha funny, vehicular manslaughter, and there's nothing funny about that. But yesterday, Tesla, not me, not analysts, not strategists, not some dumb, stupid, like social media Barstool Day website, Tesla insiders reported that there's going to be a 15% sales volume drop in the first quarter, and the market was non-reactive at all. So there's only one of two ways to construe this. The market simply doesn't care at this moment because it's all about window dressing, and this stock looks like financial porn. The other part of it is the market says, we don't care because there's so many other things afoot inside Tesla, whether it be, data centers, whether it be SpaceX, there's many other projects and other cash flow means going on inside the company that a 15% hit on Tesla won't matter. But in the olden days, when you heard a 15% drop in a car company, that stock got whacked a ton. So right now, Tesla's what I call Teflon. It's not in a penalty box where nobody wants to buy it, but it's definitely Teflon right now, for now. The other two stocks I want to throw back to hit on is Inside Out. And that's just, hey, listen, an insider at Nike stepped up to the plate, and Garrett, broadcasted it before me, so I give him credit. I caught that too. An insider at Nike dropped $1 million on the table and said, I'm going to buy the stock. Now, again, I like insider buying. It's healthy. It sends a positive message. Insiders don't put their money at risk unless they see something. I like that news. The problem I have is I'm not going to touch this stock with a 10-foot pole. I couldn't care. I wouldn't buy the stock. Why? Because regardless, I'm not going to deal with the stock that trades. And I'm going to go back here with Nike. I don't know why this resits every time. Okay. I'm not going to buy a stock on a 36 multiple with no growth. It's never going to happen. You can buy it and put your money at risk like Costco and Walmart, which are bubbles. That's a bubble, people. I'm happy for the CEO. Yay! But you better come up with a monster quarter that compresses that multiple, or a lot of you are going to be very disappointed. I would not, I repeat, not buy on that news. I would not do it. But it is a shot temporarily for a one-day pop of a gamma squeeze. Yeah, you'll get a little bit of play out of it today, but just for one day. Last but not least, The Long Goodbye. Remember the movie The Long Goodbye? There was a long kiss goodbye, the long goodbye. Everybody, let's do it together. Let's throw a kiss like we do when we did the TV show like Love Connection or Dating Game. Let's all wish Warren Buffett goodbye. This is Buffett's last day of work forever. Bye, Warren. You've done an amazing job. There's nothing negative I can say other than your last few years, you made a lot of bad picks. But because your track record is so good over the long term, you get the Bierman golf clap. Some of the stuff that he bought, he made a lot of mistakes. But for a guy who started with a few thousand and turned it into almost $1 trillion, there's not much bad that I can say for a guy who's been around for 60 years doing this. He's 95 years old. He's done, people. So pay the man respects. I know he's not the man he used to be, but Berkshire Hathaway has been just an amazing, amazing ride. So let's all bow to Warren Buffett, give him the respect he dues, like I said. And let's just say, hey, Berkshire Hathaway did its stuff. I know I can't cover everything, people, but let's just take a look at Berkshire over the long haul. I wanted people to look at it from day 20 years. It's just something that, it serves its respect, where he's just grown it, 15, 12% over the long term. He's an old value guy. I'm an old value guy. My respect to Warren Buffett. So let's belong goodbye. Somebody else is going to take it over. Let's just see if he can copycat and step in the shoes of Warren and just continue to grow this company. It'll be interesting. I don't think he will be able to do Warren have the magic touch. I do think the stock is due for a correction, but anywhere below that 60,000, I'm with Garrett. I'm on that stock to buy it. All right, because it's basically like a liquidity income hedge fund. Without further ado, let's move into the surprise. And it's not today. It is not a lesson. People are like, it's a lesson. It's not a lesson, people. You would be wrong. So I'm going to go to year to date. I'm going to consider year to date. I can step in and do year to date on the time frame. All we're going to do today is do something special. I've never done this before. It's a first and of its kind. Don hasn't done it. Garrett, I'm doing it. I'm going to be the one to break, be the vanguard to start a new tradition at TheoTrade, and others can run with it if they want to. But here it comes down to. Today's coaching session's called Calendar Year 2025 Recap. Stories that defined capital markets. Just a little bit of a recap and see whether or not there might be trades available to short or to long. It's up to you. I put it in your hands. But these are the stories that define the year. Friday, when I come in, we'll do the Bierman tradition, which is the top 5 winners and losers of the 4 major indices: Russell, Dow, NASDAQ, S&P. We always do that. I do it once a year. I completely skip the entire story. I just spend the whole hour talking about the winners and losers. This, we're going to talk about the basic 9, 10 stories that define this year, because I don't think they're going to define next year. I think there'll be an overlap, but I think these stories will kind of find their ways into the backdrop, and we won't forget about them, but they'll be a distant memory. Old Lang Syne. Number 1, the number 1 story, and it's not in any particular order. It isn't. There isn't a ranking system here. But I can tell you this. The number 1 story for this year, without even a question, there's nothing you can say. It's the AI revolution acceleration. It's the proliferation of AI. This is the year of AI. This is where it came out. So let's just go look at the stories that define the year. NVIDIA is the stock of the year. If you went to Time Magazine and said, what's your person of the year? There is no person of the year. It's Jensen Huang if it is, and if it's not, your person of the year is NVIDIA. That's the person of the year, period. Jensen Huang deserves Time Magazine's person of the year. This guy reset, recalibrated an entire new movement. He's changed the world, the face of the world, in less than a year. You can like him, you can hate him, you can make fun of him. I don't care. The guy is changing the next 10 to 20, 30, maybe 1,000 years the way we live with AI in terms of being the vanguard, the picks and the shovels that are basically getting this revolution going. I believe at this point, we are in the 3rd to 4th inning of the AI build out. I believe there is more to come with robotics, with healthcare, even property management. There's more to come. I think service industry is going to be taken over by AI. There'll be no people in a while. Okay. So Jensen Huang it's NVIDIA that defines the year. The other stocks that define the year are Palantir, which is another big AI play. Okay. You can throw that in the mix. Another stock which defines the year when it comes to AI, Micron Technology, because Micron Technology is at the forefront of designing and building the chips on AI. So Micron Technology gets credence here. Those are the stocks. When I think about AI, that stands far and ahead. The other 2 that throw AI into the mix, okay, are Google, because Google's now basically very much AI driven. And then, of course, Oracle, which has given back a ton. because they made a lot of what I call like miscalculation of errors in what they did. But Oracle goes in part of that AI that got the pump going. So this clearly is the era of AI. So what is my message to you? Don't give up on it. Don't flush in the toilet and say it's over forever, because it's not. Just like the internet's over in 2003. Yeah, we're still like in the internet age, people. You're going to see AI find its spots. Do some research. Find some niches, Niches, niches in AI, and see if you can go to buy them. You'll find good shorts. You'll find good longs. The best short in AI was this one. This is a piece of crap. It's worthless. It's going to go bankrupt, in my opinion, C3 AI. OpenAI, I don't think will ever get off the ground. So be careful where you place your bets. Next. Okay. Number 2 story of the year. Data center build out. Now, if you thought that AI was the biggest winner this year, you would be wrong. It doesn't hold a candle to precious metals, which we'll get into next. But the data center build out, okay, is where I fell short. It's where I screwed up because I owned them. Damn it, I owned them and I sold them way too early. Ugh. But I made money, but I sold them early. So let me give you the vanguards, the leadership of the data center build out. And the data center build out means who are the companies that are building data centers to house data silos in cloud, building out for AI, because AI itself is going to get bigger and bigger and bigger in terms of saving data code, saving data language, okay, everything that goes into the bytes and the terabytes, building out data centers. That's it. It's not like building stuff like, let's go build like, centers for storage. That's not where it's at. It's data storage, not things, tangible things storage like furniture and cars, right? And wood, no, and clothes, no. It's data storage. Here are the big 4 players. And it's sad because if you look at I bought this sucker during the Trump tariff blow off. I did. Damn it. I blew it. I started buying the stock somewhere in that low 40s over here, started buying around here. And by the time it got upwards of about that 80s, I started blowing out of it. So I got double my money. Look how much of an idiot I am. Did I see this coming? Nope. Did not see it coming at all. Did you? No. Western Digital is at the forefront of the build out, and a lot of people had no idea. They're the number one. Look what they do. Offers HDDs, data center drives, because they do disk drives, spinning disk drives that stores it, data center platforms, external drives, home and office. This is the firm that made the data center build out happen. They absorbed all of the market share along with Seagate Technology. Western Digital is a US-based company out of San Jose. Seagate is a company based in Singapore, Seagate Technology. So Seagate and Western Digital were the 2 biggest players and beneficiaries of the data center build out. Be aware of that. So here is my advice. Would I short this? Not just yet. The valuations you may think are stretched. They might be a little bit, but I think 35% growth for this industry is not unthinkable. It's not a bubble, not by a landslide. Not even Walmart's a bubble. That's not a bubble. But if this does have a substantial Fibonacci correction, Uncle Jeffrey is all over this. You will know, Genesis Cog members, when I find an entry point, you'll know. This is where I want to get back in. When we meet that first half technology correction, this will be on my naughty and nice list. That'll be on my nice list. Seagate, Western Digital. The other 2 players who were massive beneficiaries of this, as I mentioned, was Oracle, because they're building out for the cloud. They're building out data centers. And another big player for building out data centers, this is going to come as a shock to people because not everybody's a winner. Everybody's a winner, babe. That's the truth. It's not the truth. That's the song. Everyone's a winner is by a song called Hot Chocolate. Not everybody's a winner. These are the other players who built out. Microsoft had a good year, but not what it could have been better. Microsoft is a big part of the data center build out. Equinix, another player, bad year. So if you bought this data center stock, you got burned. Another big data center player, Digital Realty, had an off year. Why am I bringing this up? There's always a method to my madness. I don't just do this randomly, people. You can't buy just any. It's like word association. Tacos, Taco Bell, hamburgers, McDonald's. You can't do that. Data center build out. Me buy anything like you're a simian ape. Can't do it. You got to research it because not everybody in the data center space delivers. They didn't deliver, and they're a massive player. Digital Realty, APLD, okay, they were a big winner. Applied, you have to come up here. Applied Digital Corporation was another big player inside the build out of the data centers. And of course, you have Micron, another massive player in the data build out. That was a big winner. And then last but not least was American Tower. And American Tower was a disaster. So don't tell me that every time you hear the word data center, you just close your eyes and buy. Stop it. Do some damn research. Do it. Don't be lazy. Research it and figure out, is this what I want to buy? Is this the right place to be? Because not everything in the AI space and data center build out is going to be a winner. That's what I'm telling you. Next. All right. So I got that out of the way. Got more to do. I got a lot of problems with you people. No, I've got more to do this. So next on my list of the current slide, this is, unless you've been living on a planet, you've been in another solar system, or you've been kept in a cave, right, living underneath a rock, this is the second story of the year. I consider this like AI #1 and precious metals #2. I'm going to give Garrett the credit where it's due, and Brandon. Brandon helped me. I didn't do silver, but I did the gold trade for a while, okay? Garrett's killed it on this. Don killed it. Let's face it, people. This was the trade of the year. Even more than as much as the AI trade. But most people don't trade precious metals. They just don't. It's very much institutional. It's very much sovereign, as in debt ownership by governmental entities. But this is the story of the year. If there was a two-headed monster, it's precious metals trade and the AI acceleration, revolution acceleration. Those are the two stories this year. My message to you is this, because this is a recap. Recalibrate. Gianni is a great guy. Love the guy. But stop trying to don't fall into recency bias. It'll destroy you as a trader. It will destroy you. I'm telling you this. This is not going to happen. The chances of this happening are zero. You're not going to see something go up another 100%. You might see it go up 25%, 30%, rate of change of gains. Don't look at this and extrapolate it going forward and think we're going to duplicate this. We're not. Are we going to end down? Maybe. Are we going to end up? Maybe. But this is a one-off year. It's a one-off year because everybody blew out of crypto. Every crypto. They didn't want to put it in the stock market and they didn't want to put it in the bond market. But they got to put it somewhere. And when a dollar crashed, that's where it went. It went all into gold. It went all into silver. SI. There's the story. Morning glory. That's it. It's a bubble. That's more of a bubble than gold. Gold's a bubble, but that's a bigger bubble. But it ain't just these people. It's not just silver and gold. Copper. And copper crashed and fought its way back. Look, it fought its way back. You can go into a lot of precious metals. Palladium. What's palladium? P-A-L-A. I forget what palladium is. I think it's got to go to the futures here. So let's go to the futures. I think palladium, when I get in here, if somebody knows it offhand, let's see if it's palladium. I can't, it scratches my itch to see which one of these. I know it's P something. Let me go to palladium. Yeah, /PA. I was close. So it's not just silver and gold. It's an across the board copper, palladium, everything that was in the precious metals went parabolic. It's a bubble. It's a liquidity bubble. It's overowned. It's a sentiment bubble. I advise all of you, trade this. Don't invest in it because easy come, easy go when it comes to commodities. It's supply and demand. And if somebody else, some big whale unloads and you're the buyer and there's nobody on the other side, you can see this crash and burn. You just don't know. So this is the year of precious metals. Keep an eye on them, but don't expect a repeat performance of next year. That's completely unrealistic. It's not going to happen. You might see it swing up to 2,100. It might go right back up 500. But the idea to see it go, up, 200%, that's a once in a generation type of move. You see it once every 40 to 50 years. So kind of like trade it and it's in play, but be realistic and set tight stops. That's what I'd say. Next on the list of stories that drove the year. I hope so far everybody's enjoying this. I put this together late last night and closed it out early this morning. So Trump tariffs is the other story of the year. Like I can't get away and far and away from beyond this. I can't get out of this. This is an amazing story because everybody knew the tariffs were coming. Surprise! What surprise? Everybody knew about Liberation Day. Why the hell didn't you hedge? I did. I cleaned up on that stuff. Okay? When you know something's coming, take advantage of it. The S&P 500, right when we got up to the end of that quarter, which is technically right about here, that's when I started hedging like crazy. I listened to Corey. I listened to Blake. I caught what Garrett said, and I was like, look, we broke the support level. I'm going to hedge. I just started buying puts and selling shorting as much as I could. Cleaned up. I'm one of the few traders who made money long and short in here because I didn't own stuff that was getting drilled and crushed to death. But this is the story, the third story of the year, which is amazing to think about. To think that we collapsed here. And this is my message to you. This isn't about the S&P. My message to you is this. Just because the market, you see something like this and go, oh, that looks terrible. I'm never going to buy it. Look how much money you would have made. People, I make a living off of trades like this. Every time you crap in your pants and throw away something that's cheap, I'm the guy that picks up your trash and makes it my treasure. I make a living off that. Just because the market drops, calm down. Don't fall apart. Don't turn on CNBC, the gloom and doom network, because they're bullish at highs, they're bearish at lows. Just sit back, pull out the Fibonacci's, pull out your technical indicators, look at the rotations, tune into TheoTrade, and calm down because this was an opportunity of a lifetime. And nobody knew it back then. The idea here is when this market corrects, and I guarantee it's going to correct this year at least 10 to 15%. Don't necessarily get bullish. Don't get bearish. Be calm and be opportunistic and strike while the iron's hot if the setup and the value are there. That's the message. Trump's tariffs gave you the opportunity to become a millionaire, and a lot of people just puked up their system and completely missed this. That's the lesson. That's the recap. Okay. Next on here, and by the way, down over here, I'm like, I just started buying Western Digital, On Semiconductor, all the stuff that everybody else puked. I bought Cracker Barrel down here and made about 30 bucks on it. When people just crap and panic, I make a living off that because I don't get freaked out. I just figure out when the selling ends and when the buying starts. And I look at the value and go, whoa, opportunity abound. Next on the list here. And this is interesting. This is the year of the Mag 7 splintering. And people are like, what does that even mean? It simply means this year versus 2024, the Mag 7 departed. In other words, during 2024, all 7 of them correlated to the upside. All their charts trended up. They all started mid to low and ended higher. It started splintering. Why is this important? Because the splintering of the Mag 7 tells you in no uncertain terms that somewhere along the way, a market top's coming and we're not that far away. You have to have all 7 continue to rise because all 7 make up 30% of the S&P. Do you understand that now? 1 out of every 3 stocks, the fate of your life in this product is handled by 7 stocks. That's true. 1 of every 3 trades is held in the hand of the Mag 7. Will make or break you as a trader. It's a fact. So what I'm telling you is, I'll cover all 7 really quickly. Meta broke. It's not broken forever. Don wants it to be, maybe, but it broke. Meta is no longer a leader. It's a laggard. It's not going to carry the Mag 7. That's why the S&P can't go any higher, Gianni. You have to have all 7 move up if it's going to go higher. If you have 3 defections, which you have, the market's not going any higher. It's been trading at 6,900 for 3 months. I rest my case. You have to have all 7 move together. The next one is Microsoft is not broken. It's not, but it broke. It's splintered. If Microsoft continues to do a PE compression, which I think it'll do because it's at 34, I think it should be down to about 20. You will see this end the year a lot lower. Microsoft and Meta are no longer carrying the market. They're not dead. They're not investable. They're just trades. Be aware of that. NVIDIA, that carried the market this year. If somebody said, what's the most important stock in the entire market? That's it. Ask Don. Like when stocks move 100 million, people talk, who cares? Every time that stock moves, it moves like 100 billion, literally a day. So NVIDIA is the most important stock in the market. If NVIDIA holds up, the S&P can hold up. If you lose NVIDIA, the S&P is going to correct a minimum of 500 points. I can tell you that right now. You better pray, you Permobile. Gianni, you Permobile Corey, you guys better pray. If NVIDIA goes, it's over because you've lost Meta and you've lost Microsoft. They're not leading the market anymore. Amazon. Okay, that's holding up pretty well. It looks like NVIDIA. That's the one of the Mag 7. So Amazon is holding the market, but it's not taking it any higher. Next on the list, okay, you have to have on that list, and I've got the Mag 7 list. So I've gone through 4 of them. You've got also on that list, okay, Tesla looks fabulous. So Tesla is now carrying the market with NVIDIA. If I were you, I'd set up a Mag 7 watch list every day, every one of you, and turn it into one stock like it's an ETF, because you can just add up the symbols and track it like it's a stock every day. Because however the Mag 7 goes is how the S&P goes. It's a fact, people. You may not like it. You may hate Kaufman for it, but he's right. Tesla and NVIDIA are splintering. They're going up while Meta and Microsoft are going down. You got 2 more here on the list, people. Apple's carrying the market. Apple, NVIDIA, and Tesla are holding the S&P near the high. What's dragging it down like a cement kite? I told you, Microsoft, Meta, okay? And the last holding it up here is Google. So Google looks incredible. I keep telling you, if NVIDIA goes, that'll start to move down. If NVIDIA and Google go down with Amazon, it's over. You're done. We're getting a correction, and there's no way for you to stop it. No way. And my model said, and I said this 2 weeks ago with Chuck Jaffe. He's like, are we going to get a Santa Claus rally? I said, not only are we not going to get a Santa Claus rally, we're going to start the year down. And Chuck was like, what? I was like, yep. Now do you believe me? People like, I'm going to buy this dip. No, you're not. When I show you the model with 5 minutes to go, we're going correct in the first quarter. I told you. How far? Don't know. 10%? Probably. But don't go out there and believe that crap on Bloomberg. So goes the year. Lies, lies, and more lies. We've started with down years. In 2023, we started down, and we had a massively up good year. The first month means nothing. It just means we're down. That's all it means. The Mag 7 is splintering. Follow it. That's ode to Don Kaufman. The global label market in flux. What does that mean? It's all about 2 things. It's AI. It's AI displacing billions of people. You're going to be out of work, millions of you, and you're not getting that job back. I'm sorry. You're so cruel. I'm not being cruel. I'm just being realistic. Stop living in a daydream world. The world is changing. Get with the damn program and realize that right now, jobs are declining like crazy. The World Economic Forum even put out a beautiful list of jobs. Frame light trucks, software, top growing jobs, top declining jobs. Cashiers, building caretakers, material recording and stock keeping clerks, printing, accounting, accountants, security guards. These jobs are going away. Get this list. It's the Future of Jobs report by the World Economic Forum, the WE Forum. Get this list. It's splintering. We're going through labor pains, people, no pun intended. If you don't see this, you're not going to understand how to position yourself with individual stocks, because there are certain growth sectors and there are certain declining growth sectors. Graphic designers going down, claims adjusters going down. They're being replaced by AI. That's what I'm trying to tell you. There's a big, massive seminal shift going on, and you need to get with the program. So if you can't get with the program, you're just going to fall behind. So if a lot of you are out there like, my kids, where's my kids' jobs? Make sure your kids are in STEM, science, technology, and engineering, and math. There'll always be a job there for them. Coding, statistics, this is where they need to, even if they go into like basket weaving, these are where the jobs are. You've got to have a background in STEM. The world is changing, and all these jobs that are being displaced by AI, okay, you don't understand. They're not coming back. Microsoft laid off 20,000 people. Meta laid off 10,000 people. Newsflash, those jobs are not coming back ever. They're not rehiring, okay? So the world is changing. AI is making things more difficult to hire, but it's making companies more profitable. It's a trade-off. There'll be some regulation, there'll be some growing pains, but that to me is one of the stories of the year. I call this the wake-up call of the decade. 10 years from now, people like, what happened to Walmart? Walmart had at their peak 1.2 million employees worldwide. By 2030, the company says they're going to only have 600 to 650,000 employees. Half those employees will be replaced by robotics, AI, machines. There'll be no people anymore. Get used to it. Next, right? All right, sorry for that. I didn't mean to be cruel, didn't mean to be mean. It's just a dose of reality. You're not, things are changing rapidly. And I'm learning this. I'm old. I'm an old guy. I'm old school when it comes to trading, but I'm new school when it comes to understanding, okay, what industries to avoid and what industries to get into. And I'm helping students at Loyola hopefully get jobs, which I secured one at one of the best hedge funds in Chicago. Energy transition. All right, so it's been a terrible year. It's been a horrible year for energy. Horrible. Okay, not so fast. Not so fast. The idea here is when you talk about energy and transition, people are like, what does it mean, energy and transition? Okay, I'm going to try to bring this to you so you kind of can understand this. In June of this year, the Energy Transition Index, called the ETI, recorded the fastest improvements in a decade, but they warned that most countries lack the foundations to sustain progress. Clean energy investment hit $2 trillion this year, but the majority of this went to advanced economies in China, leaving other regions behind. So the idea here is energy access, meaning affordability and emissions. Energy access, affordability, and emissions are improving, yet readiness for future shocks lags. So extreme weather and infrastructure stresses, notably the rise of AI-driven energy demand, right, pose real threats to net zero pathway. So get used to this from the World Economic Forum, that there's going to be a transition in energy. And right now, a lot of the oil has been way behind. Why? Because of electric cars. Because most of the energy transition has gone to power up AI data centers. That's where it's gone. So the price of oil is going to come down. Just remember, it's in transition, but that cyclicality still is a fundamental part of the business. So while you may be bearish energy, I'm bearish in oil. I'm so bearish, okay? Don't live on charts. Charts only tell you where you are. They never tell you where you're going. I'm telling you, when you look back at the CL and you look back at a 5-year monthly, it's approaching a cyclical bottom. It might go down to 50. It might stay here and rally. But if we break the upside of this channel, I'm already loading the boat. I already own Devon, Oxy, which Garrett owns. Once we break that upper channel right there at 60, we're going to go right back into a raging breakout, slow bull market. And that's where I'm collecting massive dividends, low PEs, high return. I'm telling you, I'm the only one out there, only one outside of Garrett, who's telling you now is the time to buy energy stocks. We're in flux right now, and energy has got a bad rap, but I think next year it's going to surprise a lot of people. All right, next on my list of individual things, stories that drove the year. I'm trying to get through this. digital currency flameout. I remember when the year started, and I'm not citing anybody at Theo, because nobody at Theo said this, but a number of people, Michael Saylor, a number of people came on TV, Tom Lee, they were raging bullish on Bitcoin and Ether. Some people were calling for 135,000. Some people were saying it was going to call for 140,000. I mean, I heard every single thing under the sun in this business. I heard 190,000. I heard Kathy Woods say this is going to 1 million. Okay, I want everybody to look here because I'm going to turn this into a daily chart. Daily, year-to-date daily. This is the year-to-date of Bitcoin. This is the year of, quote unquote, what I call the crypto flameout. Good night. Is it over forever? Don't know. My point being is this. Crypto started the year over here, got dunkadooed when it came into the Trump tariffs. I panicked. I'm going to crap in my underwear and sell it. And you missed about a 60,000 point run. I'm not a crypto trader. I'm not a crypto expert. The only thing I know is this. Crypto moves on sentiment and it moves on supply and demand. Easy come, easy go. Don't fall in love with it. Don't invest in it. Just get in and get out when you can. Some people bought up here and they're screwed forever because they're probably margined out right here. I'm not sure where it's going, okay? But until you show me where this fits into my daily life, like I drink water, I eat food, I use the internet, I use Google, I buy what I own. I don't know how I'm going to ever use this. What use do I have of this other than the fact it's like pet rock, other than the fact it's like collecting cars. It's like some people collect cars for the fun of it, but they have no use for it. Show me where I can use this. Where does this come into my life? This doesn't surprise me. This flameout is not just Bitcoin. It's a flameout in a lot of others. Here's Ethereum, okay? A little bit of a flameout in Ethereum. Where's it going next year? Don't know. But I can tell you this. Don't trade something you don't understand. If you don't understand it, why the F are you trading that piece of crap? Why? Everything I trade, everything I'm short, everything I'm long, I know it really well. So if I get burned, I don't feel surprised. This is one of those things where, to me, you got lucky. Did you buy up here? Did you sell there? You got lucky. Because luck, you're always in this business going to be humbled. This is a humbling experience. Will this happen to gold? Don't know. Maybe. All I know is statistics always comes in. You can't avoid math. Math beats human psychology every time. And math tells me gold and silver going correct. That I know eventually. This was a layup because you knew it was going to correct. Will it come back? We will see. I don't think so. But this was the year of the crypto flameout. Crypto gave way to precious metals. Will precious metals then hand it back to crypto? Maybe. Or will precious metals die next year and hand it off to energy? It remains to be seen. I'm just covering stories, people. I'm here to make you go, that's what I'm making you think. Because if I make you think, I can make you money. Consumer spending bifurcation. This was the year where if you went out and said to me, I'm a consumer and I'm just going to spend and I'm going to pick any retail stock, you'd have gotten your ass blown out. There was no way you could have told me how to trade this market. Let me give you an example of what I'm talking about. Target's in the same business as Walmart. I bought Target at 145. Yay! Look what happened to you. And you're like, I didn't buy Walmart. Look what happened here. How did Walmart go up and Target decline? And Target's earnings on a percentage basis were better than Walmart's by comparison. Sales and earnings were better at Walmart, better at Target than Walmart. The days of you buying retail based upon like sector, based upon, merchandising, based upon designer, based upon high end, low end, those days are over. You cannot buy one stock and go, well, if I buy Walmart, I can buy Costco. Doesn't work anymore. You have to buy each retail stock individually because the consumer is officially bifurcated. Right now, the top 10% of the wealthy income in this nation supports the stock market. When you go out and you say, like, look at that stock at an all-time high like Lulu, that's not from people who are basically South Chicago. No, they're not. That's from the wealthy people in the United States who basically made money in crypto. They got white-collar jobs. They made money in annuities, whatever, because it differentiates. Let me explain this. Here's people in a stock. The largest percentage customer increase at Dollar General is the wealthiest 10% held. The individual who makes $150,000 and more took that stock up. Did you see that? Now watch this. This stock crashed and burned. Who are the people that buy that stock? The wealthy 10%. So if you had told me the wealthy 10%, what would I have done? I would have sold Dollar General and bought that. That's what I would have done. Well, if the wealthy are running the stock market, just buy Lulu, and if the poor aren't, then get rid of Dollar General. It flipped. The wealthy drove Dollar General, and the wealthy drove down Lulu because they didn't want to buy it anymore. There's a bifurcation in the economy. The poor are not climbing, and the wealthy got as far as they could get, and they're not going that much more. So you're going to have a bifurcation in consumer demographics and spending. You better get with the program, TheoTrade members, because you can't just buy any stock anymore. You can't do it. Okay. Another one, like I'll throw this out at you. You're like, I'm just going to buy Costco. How'd that work out for you? Costco and Walmart are the same stock. They're literally the same stock. And look at that. And look at Walmart. Would you have predicted that I'm going to go long and that would have happened? None of you would have predicted that. Zero. You all thought Costco is up. Bottom line, when you do, and I'm retail's my bailiwick. I'm the expert retail guy at Ask Don. I was a retail analyst for 20 years. This is what I do. I understand retail business models. You can't just buy any retail stock and think you're going to make money. You won't. Okay, you won't. I'm just going to go out and buy anything. You got to know what you're buying. I went out. I bought Gap stores. I bought Gap at $20 a share for the Genesis Cog members. We bought right over here and we doubled down, and this is what we did. You have to be really careful. You can't just buy anything because not just anything works. I'm going to go out and buy Nike. That didn't work. Didn't work at all. The consumer is changing rapidly. People are saving more. They're becoming more cost conscious. Even the wealthy have cut back. Want me to prove it to you? Even Ferrari is having a terrible year. Even the super mega Jeff Bezoses and Elon Musks, they're not buying Ferraris. People's spending habits are changing, and you need to get plugged in and not just buy because of the narrative or CNBC. You got to do the research, both socially, technically, and fundamentally. The game is over for you people. You complacent, lazy people, I'm just going to buy because CNBC and some options. Can't do it anymore. It won't work. You better know what you're buying. The last on this, that was one of the stories of the year. I'm very careful what retail I'm buying. Like I'm ultra anal careful because it comes and goes quickly. The last thing here, the last story of the year, okay, healthcare industry resurgence. When the year started out, RFK Jr. had a referendum. He was trying to literally destroy healthcare. He came in and across the board, and healthcare was out of control. Priced way too high. Pharma's too high. Healthcare insurance is too high. The payouts were too low. Everything about healthcare had been run amok. RFK had enough. So here's what it started out horrible. When it crashed, okay, Uncle Jeffrey went in there and said, let's get Merck, let's get Bristol Myers. Okay, that's what we did. So it started the year out bad. Oh no, RFK's taken over. So everybody just basically SHIT the bed. Let's get out of the... I went down and bought it down here. Sad part is I sold it up here. I made like, 10, 15 bucks. Struggled. But healthcare came back. It's as if the American public finally screwed its head on and said, stop with listening to narrative. They stopped listening to the narrative and they started doing research. You know what happens when you do research? A little weird thing happens. You tend to make money when you do research. That's how we do it. That's how I do it. And that's how Brandon does it. And Blake, we do research. Even Don, do some research this year because a lot of people miss this. I caught this one down here. That was me. I got it. You have to figure out where you want to step in. I also bought at one point this year Medtronic at around 70, started getting it over here. Okay. Got out up there. Genesis Cog, we got out over here, right there. We bought down here, we got out there. We started nibbling. Healthcare was left for dead because of RFK, and the whole administration was trying to price control them and wreck them. Even United Healthcare was left for dead, and it's trying to fight its way back. Now, it hasn't fought its way back. Neither has Cardinal Healthcare. Cardinal Healthcare has. But they started the year with a cloud hanging over them, and they came back. I'm trying to tell you, as much as I fight with Don, it's a love-hate relationship because we disagree on so many things. The one thing I can tell you about Don's right. You got to stop listening to TV. It is going to wreck you. You have to stop listening to go to social media sites. They don't know squat. They have an agenda, and they're trying to get you to buy what they want to sell or get you to buy so they can get out of a bad position. Okay, they have an agenda. The market knows. It already prices things in already. So when you say, I'm going to sell down here, the market already destroyed it. You're trying to get squeezed blood from a turnip. Stop selling down here. You're not going to make any money. You're going to get squeezed. Look what happens. Don't short into a hole. Don't buy into a rocket ship. Do your research. Don't listen to the media. The media is there to create angst. They're there to create clicks and noise, and they don't know anything. They're bullish when they should be bearish, and they're bearish when they should be bullish. The pharma was left for dead. Healthcare was left for dead. And that's the story of the year. That's the last story. It resurged. Oil's left for dead. That's my largest holding. Food is left for dead. That's now my largest holding. I'm way ahead of the curve because I see things unfolding technically and fundamentally, and I don't listen to people on TV. That's how I make money. The last thing I want to throw out is this before I say Old Lang Syne and I turn this over to Brandon Chapman. I want to throw this out, okay? And I'm going to tell you this whether you like it or not. Like it or not, I'm going to bring up the Genesis Cog model, okay? I'm not saying the market's going to fall apart. I'm not. So those of you out there, I see you prints up, here comes Mr. He's so bearish, okay? I'm raging bullish on a lot of stocks, a lot. But when it comes to the market, I've learned one thing. The slopes are never wrong. You are. And that slope is rolling over. If that slope curls underneath 45 degrees and we go through 50, I don't care what any of you think, we're going down because the machines are programmed to sell into slopes. They sell into the downward slope. That's what they do. So if we break underneath 6,900 on Friday morning and you buy on the dip, you might get a bounce because the 401ks are going to plump. They're going to just drive money in there. Don't fight the algos. Don't fight the slopes. If that slope breaks underneath that signal line right there and breaks underneath the zero line, you're not getting out. You're going to take a massive hit in the first week and go, damn, watch the slope. The slope is telling you we're going down. I don't care if this pops 20. It's getting worse and worse and worse. And the advanced decline's getting worse. We're setting up for some type of corrective action sometime in that first quarter. Be aware. On that note, I'm going to turn this over to Brandon Chapman. Wish all of you a happy and healthy new year. Old Lang Syne, which is to be nostalgic, and let Mr. Chapman run with this. Your lighting is still not that good, but it's getting better, Brandon.
No, I just messed with the color, but yeah, I just got my one light here. I have two of them, but the desk isn't big enough. So so my mobile setup now is I have my Mac Studio, then I've got two 24-inch like mobile monitors. So I got one vertical, one horizontal, but just not enough desk space for enough lights.
Are you in some type of like house, or are you in a camper? Where the hell are
No,
you?
I'm in a house. I just turned off the lights. I don't know. I was just.
I hear you. Did you get rid of the family, or are they still watching you?
Oh, the family's still here. So we're just down in Murrieta, California. But so you saw Duran as well, just like last fall?
No, I saw him September 1st, 2023.
Oh, 23.
It was a birthday gift to my wife, who told me that she wanted that if she could divorce me, she'd marry Taylor. Remember John Taylor?
Yeah, yeah.
Who's the keyboardist? Is that Andy?
Nick Rhodes.
Nick Rhodes. She's like, I want to marry Nick Rhodes. I'm like, go for it. You can have him because he's worth hundreds of millions and I ain't worth anything. So go for it. You'll be better
Well, I
off
mean,
with
they
the
had they
pro.
had the they had the big four, right? So you had Simon LeBon, John Taylor, I think it's Roger Taylor, and then Nick
Roger
Rhodes.
Taylor and
And
Nick Rhodes. And for those people who don't know, like Roger Taylor is one of the best bass players he's
John Taylor,
amazing
yeah.
on when he plays the song Rio. That
Yeah.
bass was cranking. And by the way, guess who opened for them?
Who?
Chic, Nile Rodgers.
Oh, there we go. Yeah.
So they had Chic open and then they transitioned, and there wasn't a person in that crowd under age 50 years of age, not one. It was at Waverly
Yeah,
Island in Chicago.
it was an older crowd out in the desert. It was in Palm Desert, but they started 45 minutes late, and
Ah,
apparently Nick Rhodes a little too much drinking at dinner, and they hit him a couple of times. Simon LeBon did, but
yeah,
and then in the middle of View to a Kill, we're about like a minute and a half in, all of a sudden the entire everything just breaks. Right, the audio is gone, and they keep performing, but you can't hear them. You can hear the guitar, you can hear the drums a little bit,
right.
but it just never came up. So because I'm sure they'll just keep going in case the audio comes back.
Well,
But anyway, so I had to wait 15 minutes there. But overall, I'm like, you just forget how good of musicians they are, right? And John
they're
Taylor's bass
phenomenal.
line comes out way more in concert than it does in in the recordings. So
The
good. It was
encore,
good.
they had two encores. One of the encores was Save a Prayer, and the
Uh-huh.
other encore was The Reflex.
Oh, okay. So they did Reflex right at the towards the end, and then Rio was the second one. So Save a Prayer and then Rio
Yeah,
were the
they did
two.
all and they did the Hungry Like the Wolf was everything and they did Skin Trade, by the way, which is another great song.
Uh-huh.
So I mean, unless you're like a Duran Duran fan, you can't appreciate it. But they were back in the '80s, Brandon. They were the band. They were it.
Yeah. I was like, I said a lady next to me, I was like, and when they were late, it was like 45 minutes. I was like, I'm an okay. I mean, I like Duran Duran, but I'm not like an overwhelming fan of Duran Duran. But we went with my sister, my wife's brother and his sister, my sister-in-law. And but it was a lot better live. But I was like 45 minutes. I'm like, dude, these guys aren't Spandau Ballet. Come on. I'd wait a couple hours for or Roxy Music. I'd be there. I'd wait forever.
I
But
get you.
but no, but it was a lot. They're great live though. It was Simon LeBon sounded great. He was a little hoarse, but overall, I mean, he sounded awesome. And
Yeah.
John Taylor's. I was kind of disappointed they did White Lines, which was
Oh,
good.
yeah.
But John Taylor's like up on the stage, like at the top of the stage. I mean, doing the whole bass line thing, and I'm like, no camera was on him the whole time.
Oh man.
We went a couple of times, but on Rio, they showed him like playing the bass. But that's a great bass line for White Lines. And no video of it. I kept showing the guitarist. I'm like, who's this guitarist? He's not even an original member.
All right, man. Well,
Anyway,
let me turn this over to you, and let me wish you and your family a happy New Year. Get home safe
yes, you too have a happy New
to
Year.
Utah when you get back. Old Lang Syne, buddy.
Yep, Dan Fogelberg.
Yeah. See ya.
See ya. I'm gonna share my desktop with you, and let's get rolling here. We're gonna do a little bit of retrospective today. Now, what's retrospective? We're looking back on the year.